Good morning, everyone. Glad you're here today. Well, we've had some good volatility in the markets here, well, especially starting yesterday once again with the tariff wars. Yeah, glad you're all here. I apologize, it's still dealing with some sort of bug. So if I hit the pause button now and again, just know that it's because I don't want to cough in the mic. All right, let's see here. So we're going to get started here. Let's start rolling here. So first things first, we always got to talk about risk. And of course, with any type of trading, there is risk. And Nadex is no different, but the one advantage, of course, Nadex has is that we will know in advance our max risk on a trade. But even that being the case, only trade with risk capital, money you can afford to lose. Don't trade with the rent money, food money, that sort of thing. It really comes down to good old common horse sense, as I like to say. All right, that's me. That's about all I got to say about me today. We do live in the beautiful Rogue River Valley. We've actually had some fantastic weather here the last couple of weeks. We were this weekend, I think we were in the upper 80s. It was nice. All right, so let's talk about news events for the coming week. We're going to look at a calendar here in just a moment. I'm a big believer, especially when you're trading vehicles such as Nadex binaries or Nadex spreads, whatever it might be, touch brackets, you got to know when the news is about to come out. Known news. Now, there's not much we can do about unscheduled news, President Trump tweet, that sort of thing that's going to move the market, other than, watch Twitter. But as far as known news, I think you need to know when the big events are happening, just because try to avoid them if you can. Either stay out of something a couple hours before a news event or an hour and a half after a news event, just to let things get back to some sort of normalcy. I like to check news a couple of different places. My favorite of the two is Forex Factory. I've just been using it for so long, but my FX book is actually a very good source as well. I'm going to show you a third one here this morning, a little bit longer term reports. Sometimes markets will pop and you're sitting here wondering why are 6 of the Forex pairs popping and there's no scheduled news. Well, you can go look at this other site here. I'm going to show you here in just a moment. But let's go over to the Forex Factory right quick here and check it out. And I'll load that up here for you. There we go. Right, for those of you that join me each week here, you're very familiar with this. This is at forexfactory.com. It's their economic calendar. And one thing I like to do, and I mention this every week, is just come up here to this filter in the upper right corner. By the way, this is a free service. You don't have to sign up for it or register or any of that sort of thing. Just click the filter, and then I like to uncheck these boxes because I want to just look at the high impact events myself. Now, if you choose to look at the other events, you can surely check those, but this kind of cleans up the calendar a bit. And you can see here today, news at, these are, by the way, all Eastern times. You can set it to your own time zone as well. But Eastern time, Great Britain, of course, we had some news this morning, and then at 9:30 tonight out of Australia. Tomorrow is a pretty big news day out of the US. We have a couple of different reports. Also out of Canada, and then again on Thursday out of Canada, you see some more out of Australia. And then big news on Friday out of Australia, the parliamentary election. So could be a big mover of any of the Forex currencies that are involved with the Aussie dollar. For instance, the Aussie yen, the Aussie US dollar, as an example. All right. The other news site that I like to visit from time to time is this one right here. It's a little bit different. It's called zerohedge.com, zerohedge.com. Let's see here. Let's just click the refresh button and we'll see if anything news popped up. Yeah, so you can see the headlines have changed. So this will give you a little bit more detail about any specific events that might have just sprung up. And it gives you the exact time when the event was excuse me, when the article was released, and you can check that out there as well. So anyway, something else you might want to keep an eye on. All right, let's get back to presentation here. So we're going to look at some different charts here for as far as volatility for the week and how the markets may be affected. So let's do that. Bring some charts over. We're going to try to look at at least 3 markets here this morning. All right, so I am a believer in looking at multiple time frames, or fractal style of trading, if you will. And what that means is just looking at it in different time frames. And I start out with, generally I start out with a 243-minute chart. You could just review a 4-hour chart if that's all you have available. And let's see here if I can get the colors back here. Yeah, we won't mess with that this morning. I think you get the idea. But I also like to use support and resistance. So my style of trading is looking at multiple time frames. And if that means I'm looking at a daily chart, I'll look at the weekly, monthlies, maybe a 4-hour chart as well. But I'm always looking at multiple time frames. You get a different viewpoint of the data. And so I use that in combination with support and resistance levels and patterns, i.e. double tops, double bottoms, head and shoulder patterns. And then I look at momentum and cycles. Now, it may sound like a lot, but I think the more you watch me do this sort of thing, you'll see that there is you know, some steps to the madness that don't don't have to be overwhelming. All right, so here we are looking at the Nasdaq on Nadex. It's the US Tech 100, and you can see it came down into this support zone that I have marked here. You can see this little green area. That is a support zone. The market bounced out of that yesterday. It looks like at 4:12 p.m. was the candle was formed. That was Central Time, and then rallied a little bit here. Came up, kind of tapped this resistance line that I have drawn here. This is my momentum indicator, this top indicator, and it put in its lows, and now is relinquishing some of that downward momentum that it had yesterday. All of this red candle action here. The cycle study that I use right here has put in a low as well. It's actually confirmed a cycle low whenever it crosses the midpoint, which it's done. So we'll see now if the market's going to react here once the day session opens here at the bottom of the hour, how it reacts at this resistance level. All right, so that's the 243-minute chart. I look at multiples of 3, so I'm going to move down now to an 81-minute chart. All right, so here you can see a little bit more, with a little bit more clarity, excuse me, the bounce out of this, and then momentum shifted from the lows here. You can see the way I have this indicator program, this is a proprietary indicator, by the way, but when momentum starts to wane or weaken in one direction or another, the indicator turns a lighter color. See how it's white right through here, and then bounced and then cleared the 0 line, and is now full on momentum to the upside here, at least at the moment. Now the cycle study is in a different place here, that we could be topping out here in this direction. So from this point of view, we've had a nice move up, but we do have right under here, see from the lows of price there down back into the support region. Now let's see how far that is. That looks to be about 73.65. So that's about 30 points right there. We could see, you know, we have to look at the data in a little more detail here, but we could see the market kind of come back into that area. All right, so let's move down. We're going to move rather quickly here this morning because we have several markets to review. All right, here, all right, so this is important because I'm a big believer in following divergence, and I look for divergent setups, and here's what I'm talking about. So if I look at price, this most recent up move, see how price has been moving up here? I'm going to come in, I'm going to look at a high point to a high point. I'll just draw a line. You can see right there how that line angles to the upside. All right, so now I'm going to come down to my momentum indicator. Same point in time, high point to a lower high point. See that? That divergence right there, the difference in the angle of those lines, just keep it simple. If you're not familiar with what divergence is, this is very close. It's definitely different than the upper line, right? It's flat. It's not so much angled down. So we have that divergence there. So we've seen some pullback since the high was put in over here. Let's see, that was at 5:51 a.m. Central Time. So it's been what is that? 1, 2, 3. It looks like a couple hours ago. We've already got some sort of pullback in. The way I typically would use this is look for the market to then seek out the nearest level of support. Now, of course, there's no guarantee, but here would be a support level. You can see right there, and the market did seek that out, and it did find it. So what does that mean at this point? Well, we should see some sort of bounce or reaction here, in other words, at this support line. All right, so I'm going to draw the line here. We will use this tool right there. So then I can sync that onto all the other charts so we can easily see it. So you can see how all these highs, this is all a support level here, and the market came right down to it. All right, so the first step, obviously this happened a couple of hours ago, that the divergence actually developed. So there's not much we can do to trade that at the moment. But what we want to do here is just be aware of the fact the market's sitting on support. Now it can break support as the momentum continues to the downside. And what did we just do on that other chart? Well, we drew this ellipse here. This is an area the market could move into as well. All right, so let's go down to the next lower time frame. This is a 9-minute chart. And here, so I have a couple different moving averages here on the chart. The purple one's a 200 period moving average. Let me load that up properly here. For some reason, it's not loading. So that's acting as resistance. Then the blue one here is the 50 period moving average. 89 period moving average is the red one. So they're all simple moving averages. That's basically formed like a triangle pattern. You see that? A consolidation or contraction in price. When price contracts, then it'll do it for whatever the length of time. Hold on just a moment, please. All right, so it'll contract, and then it'll eventually break out of that contraction or consolidation. And again, you can see, look at it, this time frame, momentum is clearly headed to the downside. So this becomes more and more of in play, this ellipse area here in this array of analysis. Now we'll go down to a 3-minute. Let's come down here. And one of my favorite patterns is, let's see here, is a head and shoulders pattern. And I don't typically look at them as defined by a textbook, because I'll have more asymmetrical patterns than I will anything else that most folks just aren't reviewing. And you can see that this did indeed form, and it broke down, which if you think back, what we just talked about, that divergence on the upper time frame, this was right in tune with that. That's the breakdown there. Now it's after the fact now, of course, but what we're attempting to do at this point is try to get an idea of what the market is likely to do. The market here going forward, of course, no guarantees, right? No guarantees. We're just analyzing the market at this point. Things are very quiet here for the going into the open of the day, but at the moment we see prices at support. We know there's a key support level below where the market's trading, that blue area I have highlighted, and the market could easily move into that region. One other thing I'm going to do here is use the Fibonacci tool, and we're going to measure from a couple different places. I'm going to start right here, from there to that high, and you can see that the 786 level comes in the upper third of that ellipse. All right, so as far as a retrace, but we're going to come all the way back here. There's the 50% level based off of that low is a little bit closer, but what I really want to do here, whoops, is come down to this low here at the bottom of the range. All right, so there you can see we have the 382, the 50, and the 618 Fibonacci levels. And the market will oftentimes seek those levels out almost in like a self-fulfilling prophecy. So I like to just call it my little fib box, fib zone. Nothing new. I didn't invent it. Fibonacci trading has been around for a long time. But now that I know that's a key area right there, that box, that covers the 382% retracement at the top edge of the box. The middle of the box, excuse me, would be the 50% retracement. And then the 618 would be the bottom edge of that box. But now I have a good visual of where that happens to be going forward. Again, market could potentially move into that region. All right, so I think at this point, we just got to wait for things to unfold here in the next 10, 15 minutes or so. And then we can go from there. So let's move on. Let's look at crude oil next. And we're going to come over here. And again, we'll just walk through the same sort of scenario moving forward here. All right, so let's do this. So prices actually all over the place yesterday, popped up here and then quickly reversed after putting in this high. And we really have this zone here. See the channel that price is in? That's probably better defined right in through there. If I come in here, we're probably down in the middle of that range at the moment. And so we want to do here, you can see a couple different things as far as the tools kind of give some heads up. Pretty sideways, momentum is sideways. This is almost at the midpoint. Price is in the middle of a channel. Personally, I don't like to trade when price is in the middle of a range. I like to let it lead the way, tell me which direction it's likely to go going forward. And then if it breaks out of the range, then I try to trade a retest of the breakout level. So here you can see very similar, not a whole lot has changed here at this level. We do have, this is the next chart down. This is the 81 minute. That's a support region right there. Double bottom, see the little double bottom right here? Price came down, rallied, double bottom right there. Rallied off of it, and here we sit. All right, sorry about that. Let's move down here. We'll go down to the 27 minute. Again, I think you get a little better picture here of as we zoom in on price data, where the market happens to be at the moment here. So again, the double bottom, price rallied and stalled right there. And that is probably the midpoint of that whole range that I have drawn, that blue background. And price has moved off of that. And you can see here how the cycle study rolled over at the same point in time. We didn't have any divergence on this time frame, but the market is locked in that range. And you will see some divergence here on the 9 minute chart. Show you how powerful this is again. High to higher high, right? High to lower high, high to lower high, double divergence there. And the break of that candle led the way. So again, just got started a little bit earlier here than we did this morning, this move. But again, it was in the middle of the range. Let's see, that is about a 30-cent move, it looks like, in crude oil at that point. So what I like to do when I see these divergent type of setups, especially when they correspond with patterns, I like to, if I'm going to trade it based on, let's say, a regular binary, I will look at the money binaries. Now, this is already come and gone, so that I'm not going to look to trade this at the moment. But just going forward, if you see similar type of setups, then that's what you want to look for as far as divergent. The at the monies, because those will move very quickly, especially if price starts to you know, have some, as Kramer used to say on Seinfeld, giddy up, get some giddy up. All right, so not a lot going on with crude oil here. We're kind of locked in that range, as I mentioned here. So let's move on to our next market. Let's take a look at gold. June gold, still the front month here. By the way, that was June crude oil that we just reviewed. Gold had a nice day yesterday, nice rally yesterday. Came up here to this this big number here, 1300, actually exceeded it. You can see it got up here to 1304.20 and has backed off a little bit here. Basically, as the US dollar was getting beat up, gold was rallying. And again, to do with the tariff wars, there's a lot to do with that, with the way the markets are moving of late. If you happen to be a commodity futures trader and things like you could find outside of the two markets we've just looked at, but excuse me, corn spreads. We have corn, soybeans, just big movements down yesterday in soybeans, as an example, because of that. And a random market, cotton, it's just been a monster to the downside. All right, so here we are. We've rallied. The market's pulled back a bit. It's developed a bit of a flag. So we have, let's see if I can do this so you can get a good visual of this. So we have, all right, so there's the flag. If you're not familiar with a flag pattern, just, there we go. So that's the flag pole. So this is a bull, what's known as a bull flag. The market rallied, has pulled back. And the idea is that it's supposed to be a bullish chart pattern. In other words, you would look for the market to do that. Now, we have to look at this under the table a bit, though, to get some confirmation here, because just because the pattern forms doesn't mean that it's a high quality pattern. In other words, the market's going to necessarily follow through. So we're losing a bit of momentum here. But again, this is a 4-hour chart, so it's going to cycle as well as a 3-minute chart might. And you can see that currently the cycle's to the downside. And prices has shifted upwards a little bit. I'm going to watch this because I want to see how deep this cycle goes before I look to get along this market. Right now, we're down here below the midpoint, which is right in here. So that has confirmed this up cycle. And so if you look at this, this is just very telling, I think. The market just puts in a ton of cycles, right? High cycles to low cycles. High cycles, it's the rhythm of the market. And you can see how that corresponds to price. However you want to draw it. All right, so we have the bull flag. We have still have upwards momentum that has waned just a bit. We put in a cycle high. Let's look at the next lower time frame. Again, this is June gold. And again, actually, let's do this. Let's sync this flag so we see it on all the time frames. There we go. So move up, the retrace here. So you can see here, this has already put in a cycle low here and starting to bounce a little bit here. We had a big move down in momentum right into the support that I have drawn here, this blue line. So let's move down again. So you can see how this appears a little bit more extended on this time frame. More of a little topping pattern was involved in here as well. Momentum, though, on the half-hour chart, the 27-minute, is pretty flat here at the moment. See that right there? Pretty flat. And really the market's kind of in this little range here, with the mid-levels kind of being right in here. So if we get a little gas to the upside, the market may break out of this range here. But at the moment, you can see here where it is in relation to the top of the flag. All right, so let's come down here to the 9-minute. All right, so once again, momentum here is actually at 0 right now. You can see it just above 0. Cycles trying to pop higher. Prices against this resistance of basically that trend line that I put in. Could even draw a better trend line. We'll go off high to highs like that. It's a bit more realistic, but you see there's also moving average resistance there as well. So that's why we have this consolidation here, because the market is up against resistance. There's a little channel there inside the big flag. Again, you can see how things have kind of zeroed out. Big explosive day yesterday. In fact, look at this, how flat this is going way back here. Not much momentum here on this 9-minute chart, and that's the sideways action. Yeah, oh, Steve has a question. Would you wait for price to move above the high point of the flag for an entry? I'm going to get to that here in just a moment, Steve. Good question. So I'm going to come over here. So because this is so extended on the smaller time frames, what I would like to see is the market, let's see, break out above these highs right here, and then pull back. So in other words, something like this. Pull back, retest it, and then look to come back to that magical number right there and bounce off of this region before heading higher. So again, Cam says, please tie this into buying, selling Nadex binary options. As I mentioned before, if I get a setup, I look to typically buy or trade the at the money binaries. And I talked about this last week as far as looking for looking to the binaries to provide enough time to allow something to unfold, right? So rather than trading, I personally don't trade the 5-minute binaries. Some people do, but I look at something like this. If it breaks out and retests and I get an entry opportunity, then I'm either, just depending on the time of day it is, I want to try to give it most of the day to move up in that respect. So I look for end of day expirations, or I also love the end of week expirations, because that gives the market plenty of time. Now, I'll typically use setups that come on the higher time frames. For instance, on the 4-hour chart, I'll use end of week or the weekly binaries. On the smaller time frames, like if I get a setup here off the 3-minute, I would use end of day. So again, we're looking to buy I would look to buy the at the monies if the setup comes. The setup is not there yet at the moment. So that's something you have to keep in mind as well. Just because we analyze the market doesn't mean it's ready for us to get on board. So you can see it's just starting to tick out. So again, what I'm looking for here is for the market to break above this region and then retrace or pull back. So let me clear that off. So in other words, something like this, and then like that, right? Because see where this is? I don't like to buy cycle highs. I want to see this retrace. So that would all kind of, see how that would sink in with that drawing I just made? So if this gets down here below 50 on a retrace, that's how I'd look to get on board. Does that make sense? All right, so we're just ahead of the stock market open here. All right, so we looked at the NASDAQ, crude oil, gold, and we'll just take a quick peek here at the dollar yen, and then we'll check back in with the NASDAQ before we get out of here. So here's the dollar yen. That is my support and resistance zone there. So you note the downtrend here. See the downtrend, and note that the blue line that I have here, that's the 50-period moving average. I just use that as a gauger for trend direction if there's ever any question. So we have a downtrend. So I'm looking for a bottom formation to develop here near this support level. And what I see at the moment is a possible head and shoulder pattern setting up, an inverted head and shoulder. Imagine someone standing on their head if you're not familiar with it. So we have the left shoulder. This is the left shoulder. and this is the head right here. I'm just going to wait for this right shoulder to form. Again, this is a 4-hour chart here, so this is going to take some time. It might be 2 or 3, 4, 5 candles before that develops. That is if it develops, it's a bullish chart pattern. Right, see how the strength and momentum here? Cycle study is a little flat now, but it's been moving up. So I want, ideally, for this to form down here closer to this head area, maybe down around this line that I have drawn. So we'd have a shoulder like that, something like that. So again, it would look something like this. And so this is going to roll over here for this to happen. And I would be buying at a cycle low. So I'm buying support at a cycle low. And then if I'm just the opposite, if I'm looking to go short, I would be selling resistance at a cycle high. Again, the rhythm of the market. That is ideally what I'm looking for to take shape. The market, of course, may not retrace that far. It may just stay right around here. But again, because I found this pattern on this time frame chart, it's going to take some time to unfold. Now, does that mean I can't trade it ahead of that? No, absolutely not. Let's just move down and take a peek here. All right, so here's the 81-minute chart. You can see how things have kind of flipped towards the downside here as far as the indicators go after price popped into the resistance zone, the reddish zone area. All right, so again, just kind of giving me a little more heads up that the market is possibly going to pull back a little bit further here. And again, I'm going through this rather quickly here this morning at this point. So now we come down to this time frame, you can see, oh, we're possibly putting in a low here, right? Look at that. So here's that same pattern that we were looking at on the 4-hour chart. And now look at that. You can see a right shoulder has formed. And note the angle of this 50-period moving average is now up. This right here, folks, is the first retrace in this new uptrend, right? Just look at the angle of that 50-period moving average is up. So the market went like this, pulled back. That's the retrace. And now it's trying to hook back to the upside. All right, so let's go down to the 9-minute. And we discovered that we still have some room to go to the downside, right? We saw that on the upper time frame, so we don't want to get too excited about this. We have this large area right in through here the market could easily move into. That's a support region right there. If this support gets broken, you can see on this time frame we're kind of locked in here. And on this time frame, look at that, we have a little contradiction. A little head and shoulder top, that reverse price. That's why we got to take everything into context. You got to look at the content of the individual chart and take it into context, combining all of the charts. All right, so we are just after the open here this morning on the U.S. stock market. And I'm going to end with this on the yen. I'm going to keep watching this. You can see, let's see here. This is the 3-minute chart, and really price is kind of in between these recent resistance and support levels here. So I'm going to watch the 2 and 43 minute, the 4-hour chart, see if it starts to develop that pattern. And I will look to get a better entry if it does come about on one of these lower time frames, where I can look to kind of fine tune an entry, if that makes sense. All right, so let's wrap this up this morning. Let's take a look at the NASDAQ, and we'll load that up here. There we go. So we talked about the potential region the market could move into as far as support. If the support's taken out, and that's this region here, and you can see we're only, 4 minutes into the open here this morning, and not much happening here at the moment. Sorry about that bell. So going to keep watching for that, see if the market dips down into this region. Same token, now you can see that 50-period moving average on this time frame is starting to, well, actually it's just flattening out, but moving lower here. And let's see if we have any divergence. We have a little bit of divergence here off this time frame, just basically right here as this moved higher. All right, so we have the head and shoulders. The market is really kind of in between, right? In between the shoulder and support here. So this is more of a target region if the market breaks down here, if that makes sense. Right now, it's just a time to watch this carefully. Again, that's the area that's kind of standing out at the moment that we kind of picked out, or that I picked out here ahead of the open about 15-20 minutes ago. All right, I think that's going to wrap it up here for today, folks. If you would like to get a hold of us, if you need assistance, want to find out more about the binary course that I put together, here's our contact information. Just visit us at www.gbebinary.com. As far as our website goes, that is right here. And of course, you can email us, support@gbmembers.com, or call us. We have folks in our office. We are real peoples. And those are our business hours there. We're on the West Coast. We're in Southern Oregon. So we are open from 8:30 a.m. to 5 p.m. Pacific time. So if you're on the East Coast, just figure out the time difference when you'd like to call. Make sure we're in the office. We're, again, though, happy to help out if you have any questions at all. So I'd watch those markets just for kind of what we chatted about there this morning, see what materializes here going forward. All right, everybody, thank you so much for your time. I appreciate it. We'll look to do this again next week. Yeah, thank you for the kind words. Hopefully by next week, I'll be over this nasty cold thing going on. Take care, everyone. I'm Jim Prince. God bless. We'll see you again next time.